trading in different market conditions. How do you do it? Hi, it's Charlie giving you Saturday's video. Hope you're well. I'm actually recording this on Thursday, actually. And so one of the bugbears of many traders is, especially if you are either a trend-based trader or you are a range-based trader, is for trend-based traders, they can get caught and stuck in ranges, and for range-based traders, they can get caught and stuck potentially in trends. So how do you go about doing it? The first part of the answer is you don't. We had a comment on the channel here about someone who has this very problem. Prefers to be a range-based trader, loves it when markets are in a range, but then if they break out and go into trends, then as he said, that's not good for him. So how do you actually adapt? Well, if you are trading mechanically, then you're not going to adapt because your strategy or your approach will be good in one type of market condition, but it won't be good in the other. So the only way around that is to add an overlay, which is yourself, to try and ascertain the market condition that you're in. But even then, you're not necessarily always going to be right, because there are times when the market could have been trending and then it starts to chop around and then reverse or whatever. So we can't really know. We can put indicators, CCI indicators on, but again, they'll only really confirm a lot of the time what's already happened. So the main point is, and it's acceptance. Accept that you can't possibly be right all of the time. And if your strategy, including the losers, is profitable overall, then it doesn't matter. Now, if your strategy doesn't, ends up giving back all of your profits every time, in this instance, this range-based trader said, I don't know if this is true, but let's just make this up. And let's say you're a range-based trader, and so you make money when markets are in ranges and you lose when markets are trending, because by the time the market's trending, you might already be still in a range-based trade and you're starting to get stopped out. So the real point is, does your approach, whatever your approach is, it's not going to work in every single market condition if you've got a singular approach like that. But including both types of market conditions, if you're going to go through periods where you lose, does it matter if the periods where you're right, so to speak, and you're having winning trades in range-bound markets, if you're making more money during those periods than when you're having the losing periods, then you're still a profitable trader. So, however, if you're not, then you have a problem. You've got a strategy that actually doesn't work. It's as simple as that. So if your strategy, your approach means that, yeah, you can make money for 3 or 4 months out of the year, and then the rest of the time you're losing, and again, it doesn't matter if you're wrong 7 months of the year or 8 months of the year. It doesn't really matter if the months that you are winning, you're making a lot more money. But over the course of a year, if including trading in both range-bound and trending markets, you might have several months where you're right and it's working for you when the markets are chopping around, but you give it all back every time the market goes into a trend, then the strategy is flawed. So that's probably my main advice is your approach or your strategy, does it net make you money? And if it does, don't worry about it. Don't try and curve fit to such an extent, because it's very easy to do, because you could be a trend-based trader and you're like, oh, I don't want to get stuck in a range. There's not really much you can do about it. Markets will go into ranges, and likewise they will go into ranges and then come out, and vice versa. So the real, answer is, don't try and adapt your approach. If it's profitable overall, you just have to put up with the times when it's not profitable, because any approach is going to have times when it's not profitable. And if you can go through that acceptance, then you'll be much better served. If you try to adapt, try and improve and improve and improve your strategy, so to speak, what you're ending up doing is curve fitting. So you're looking at all these things thinking, oh, right, that worked there and I'll do this. And you curve fit historical data, and then going forwards, you'll find it doesn't work either. So yeah, what you want to have is an approach that works through all market conditions. And that doesn't mean to say it's profitable through all market conditions. It means net overall, it's profitable no matter once it goes through the periods when it's losing and the periods when it's winning. Overall, it's profitable. There you go. Hopefully that gives you some food for thought here this weekend. Have a lovely weekend, and I'll be back in touch next week.